please explain to me why the dollar's going down.
Well, I think there's quite a few factors. I think one is, as you say, positioning is at a complete extreme. And I think what we had last night is, I know the Fed emphasized growth, but they also said that some of their forecasts for rate hikes depended on fiscal stimulus coming through. And there's no guarantee that will come through yet. And that suddenly introduced some, chance for a dovish surprise later this year. Because earlier, when the statement came out during the Fed meeting in December, they implied they didn't care whether there's fiscal stimulus or not. So that suddenly provided a little dovish element. And now we're getting a lot of breaks from a very consensus position, and I think there can be a real position squeeze here without ruining the long-term trend.
Without ruining the long-term trend. So, Jonathan, let's talk a little bit about kind of what the dollar has done of late, and that is moved aggressively to the upside. Is this simply this morning just a little bit of an unwind? We've got payrolls Friday as well, something maybe to think about there. Maybe the market's just gone too far too fast.
Well, this is it's better to travel than arrive. That's the sort of phrase you use when you see something like this. The dollar had a 5% appreciation on a sort of trade-weighted basis in the fourth quarter. It's much stronger. You get these minutes out, and it didn't really say anything that surprises us. We know that interest rates are heading up in the US. We know that growth is heading up. The question is how much, and it's a difficult job for the FOMC at the moment because they don't know what Trump is actually going to do or be able to achieve. So I think the minutes were what we would have expected, and there's a little bit of just market moving back on the back.
They are, I would say, on balance, still pretty hawkish. Mark, how much of what we're seeing as well is down to the fact that we are starting to see, after a big move in the Treasury curve, a sort of follow-on move in other bond markets?
I think there's definitely part of that, and I think importantly part of that is that we didn't really see yields climb again this week, even on good US data. And I think that price action around the good US data showing that US yields couldn't go any further, and yet we're seeing the squeeze in other markets. I think another really important factor that you haven't mentioned yet is the yuan today. Yuan is really being a short squeeze there, driven by the PBOC measures, and that's helping weigh on the whole broad dollar index. Again, it's another technical blow for those positions.
Just wait, we're going to get there. That's what the next block's about. So you're trying to front-run our programme this morning here, Mark. Just in terms of where this goes, you talked about the long-term trend, Mark, still being in place. Is that the case? Or is the dollar likely to go through a period of consolidation here? Kind of, what do you mean by long-term? And if we are going to head for a period of consolidation, how long could it last?
You know, it's funny you should say that. Many people have contacted me this morning and say, here, do you think there's actually a real bear market chance in the dollar, or is it just a correction? I think the point is, with Trump coming in a couple of weeks, and we still don't know exactly what his policies will be or what his administration will do, I think there's too much uncertainty to make a long-term call. What we can say is that, dollar-yen has gone from a post-election, low of near 100 to up to, 118. And that means it can pull back to 111 and still be in a long-term uptrend for the dollar-yen. So I think, we've got room for a correction here without having to make the long-term call yet.
Jonathan, you talk about travelling and arriving. The budget, the first Trump budget, is going to have to deliver an awful lot for the market to continue to believe in the bulk of the fiscal stimulus that people have priced in. How critical an event is that, and how would you trade it? How would you kind of position yourself around that kind of moment in time when he lays out his plans in black and white and presents them?
I think what he'll be able to achieve is the tax cuts element. That he can get through Congress. The spending element is going to be much harder. So I would focus on the tax cuts, which should be a pretty immediate boost, and the repatriation tax. So I think there's an immediate boost that will be positive for markets. But the spending, I think that's a long way down the line if it really ever happens.
And it takes then a long time to actually to kick in.